morning, traders. Welcome to the TMT Stock Market Strategy video for Friday, February 5th. Big job number to come out. Non-farm payrolls are coming out at 8:30 Eastern Time, so definitely should be a market mover today. We basically had a pause in the markets. We're really in a range. I'm going to show that to you in the daily charts. Really making bear flags throughout the whole indexes that we follow, the 5 that we follow. And we haven't broken out of them yet, so they're only bearish when they break out, but the patterns are there. And I'd like to see a little bit more push to the upside, get into these heavy value areas where we can get short the market. So on any good bounce, I'm going to look to short the market here. We've been talking about that anyway. But right now, guys, we've been really, coming out of the gate in January straight down, and then now we're sideways. So really let's see what the market wants to do. As far as gold is concerned, all of these safe haven sectors, and different asset classes are all ticking higher. We talked about utilities. I showed you the utility chart, the XLU ETF, how it is just literally broke out and exploded to the upside. And why? Well, because there's big fear involved. We have the VIX, we have the average true range still elevated. So that's not a good sign for the markets to come. Now, that does not mean we're going to go straight down. Got a few emails, good, actually very good emails from you guys that talking about oil and gold and stuff like that. I do think gold does revert back down once everything starts to subside. Again, it's just a fear trade. Everybody wants to get into gold, utilities, the REITs, consumer staples, even bonds. Bonds are actually rising, as you can see, and the yields are rolling over. Just basically wiped out that whole 0.25% rate hike, that 25 basis points. So something to consider. There's a lot going on here. So U.S. traders are supposed to be funneling through this information and using it to your ability. Now, the day trader, you still need to know what's going on. That's why I put these videos out for you guys to be well educated for the trading day. All right, so let's go right into it. McClellan oscillator here, not quite elevated, not what I want to see. 45%. I want to get that back above that 80%. Get above that Bollinger Band, as you can see here, and then look to see we sell off again, just like this in this area here. That's going to be the opportune time for me to look to start looking to short the market, okay? But get ready, because I do believe fireworks are upon us, and sitting on your hands, you're ready, you're eager to go. So, be like a sniper out in the woods. Just get ready, and you'll see you will be well rewarded. VIX still highly elevated at 22, not 53. But we're sitting here idled. So I do think that when we get up to this 38.40 area, I think that's going to be a great time to short the volatility, short VIX, and buy the market, and even buy crude oil for that matter, and oil stocks. Again, don't get wrapped up that oil is finding a bottom. I don't believe so. I think oil will retest that 27.56 low, if not lower. Okay, just a pause here, guys. And with the pause comes a little bit of short covering, so just keep that in mind. Obviously, if you're actively day trading, it's different, so it's not going to really hinder on your overall bigger time analysis. Okay, you want to show you that elevation again, average true range with the SPX. We're still highly elevated here, as you can see. But every time we get that little bit of elevation here, when you get to 35.40, you get a little bit of a rally, as you can see. Same thing here. Okay, so this is something that I am looking for, and I'm hoping to we can get a little bit more upside movement. And remember, I mentioned, I'll show that to you again, but since it's the cash index, everybody is caught up here. There's a lot of traders, investors that are caught buying, thinking about they were going to make the move here. All right, now that didn't happen. What happened? It went the opposite way. So the herd is caught long. And what I do believe is that when this market does rally up, they're going to start selling into that, and that's when you see at least a lower test of this area, if not lower. Okay, so again, keep it in mind. Let's just see what happens. Let the market tell us what direction it wants to go. Okay, I do see that the markets are not healthy. Transportation sector, our leader, Russell 2000, our leader, not going anywhere but lower. Very, very weak. So it's just something that I want you guys to be aware of. Okay, in these videos. All right, so we have our support at 187. We have our support over here at 182.25, as you can see. And I mentioned and pointed out our bear flag patterns, as you can see here. We barely got out of it yesterday. I mean, that's that bear flag. I'll put the pattern in, but remember, everybody's caught up here. So let's see if we can get back to that 196 right here. This will be a great area. I started doing some fib work, so it's pointing right into this area here. where we should get some sort of a fade reversal here, all right? But again, we're still a little too early. I wouldn't look to short the market here because even if you take this area and you just go across, whatever you have, you really just have a sideways consolidation as well, okay, if you ignore this little hammer candle. So it's either got to go this way or this way, and I know it's not enough help, but sometimes you got to let price dictate what direction it wants to go. You don't want to anticipate something like this because you can really get hurt, okay? Now let's take a look at diamonds, same thing. And again, the repetitive patterns are upon us. I mean, you could see it. You could clearly define a bear flag here. I mean, just you can't get any better than that. Now we want to see a break to trigger, and then that bear flag pattern, we'll put some fib targets. We'll put some targets to the downside. But again, that 150.50, that August 24th low, it would be the first target in the diamonds, okay? Take a look at our transports, and what else can you say? Ugly, ugly looking chart. Ugly looking chart. Now, sometimes these bear flags turn into an uptrend channel. Let me just draw that. And that could possibly happen. So that bear flag is not a bear flag. It's actually an uptrend channel making higher highs and higher lows, right? I mean, that's a good thing. But right now it's not. I'm still calling it a bear flag in the transports. We did have a nice day. Let's see if we can get to that 50 and fail. You remember these thin zones, right? So as quickly as it comes down, quickly as it goes back up again, too. So just be aware of that. IWM Russell 2000. Look at the Russell. Now, the transport's our main leader, right? But look at the Russell yesterday, the last couple of days. Just horrendous. Can't get out of its own way. So that's another concern of mine, that we have market divergence, right? We have Russell and the transports really diverging from the other three indices all of 2015 and the beginning of 2016. They finally are playing catch-up. But still, guys, the two weakest are the two leaders, and that's not a good sign here, okay? So just keep aware of that. Lastly is the Qs. And the Qs, again, LinkedIn down 4.5%, CRM down, Netflix down 1.5%, Tesla down 1%, Facebook down 1% this morning in the pre-market. I mean, tech is getting clobbered. And remember, you can't have a good, healthy rally without banks and tech participation. So keep that in mind. You got to realize that. And this video is geared for everybody. So when you guys are, the swing trader or the longer-term investor, don't be looking to pick a bomb to add to your positions. Wait, because I think you're going to get them cheaper. Okay? Hope it helps, everybody. Have a great weekend. For those of you on the East Coast, another snowstorm, so get ready. And we'll speak to you on Monday. Take care.